Okay, and we are recording. And I just need to share the disclaimer and we will be ready to go, gentlemen.
Share away.
Okay.
Thanks, Steve. While Steve is sharing that disclaimer, everyone who's with us this afternoon, please do keep an eye out for that and read through it. While he's doing that, we just want to welcome everyone who is on Option Hotline's live webinar this afternoon. We're thrilled to welcome Guy Adami and Dan Passarelli with us this afternoon. They're going to be speaking to you all about trading during earnings season. We're excited to have both of them here. On behalf of myself and Steve, this afternoon's moderator, welcome to everybody, and we are ready to get going and have hopefully some good questions and back and forth. So Steve, whenever you are able to share that disclaimer, go ahead, otherwise I can do it.
Yeah, actually, if you would do it, I'm having one bit of technical difficulty,
Sure.
And then we'll get right to our
No problem,
presenters.
no problem. So we'll just put this up briefly. And one reminder for everyone while you're looking through the disclaimer, if you do have any questions during the webinar today, please type them in the chat box or the Q&A box, and we'll get those questions over right to Guy and to Dan directly and be able to get those answered for you. And be sure that you stick around towards the end because there's going to be a couple of different free giveaways that Dan is offering. So you want to make sure to stay tuned for those. Can you see the disclaimer all right?
Yep. I can see it. Thank you.
All right, wonderful. I am done with that. Now we can see Guy and Dan's smiling faces. Take it away, fellas.
Thanks, Natalie. Thanks, Steve. And obviously, Dan, thanks for joining. I appreciate it. And obviously, thanks to the attendees for being here. Your time is as important as everybody else's, so we appreciate you spending a little of it with us. And Dan, let's get right into it. Market closed effectively unchanged across the board, although the Russell did close a bit lower, which I find interesting, but one day does not a trend make, as they say. But as we get towards earnings, which start in earnest next week with some of the banks, what are you looking at here? Just sort of top down, just your sense of the market, where we are, 3-4 months into the year.
Yeah, Guy, I'm looking at a number of things with my sort of investor cap on. I'm looking for a little bit of guidance, like what's going on with the economy. This is going to be really where we're going to get our best picture of what's happening. And starting with the banks is really great because, with interest rates at these levels and with all the challenges that banks face, I think if they can really perform well with earnings, I think it can be a great sign.
I say this to be somewhat, just to sort of poke the bear a bit. But, Jerome Powell told us a couple months ago that in a zero interest rate environment, earnings don't matter. I hear time and time again on the network, on our show from time to time, earnings don't matter. It's not about valuations. You're looking at the wrong things. I still think earnings matter. Do you believe earnings matter? And if so, why?
Yeah, I believe that earnings matter also. I mean, look, like when you buy a stock, you are investing in an asset, like sort of almost like investing in a bond. You're investing in this thing that creates money and either pays you out a dividend or takes those earnings and reinvest them into growing their business. Yeah, I mean, earnings matters.
Do they matter in terms of when we look at valuations? Obviously, I believe we're sort of at this upper spectrum, higher end of the valuation curve. But again, the market doesn't seem to be concerned. Is the world different now vis-a-vis central bank intervention, vis-a-vis technology, growth in different companies? The old 18 forward multiple for the S&P 500 is 23, the new 18, I guess.
Yeah, I mean, that one's hard to say. I think in the long run, probably no. I think that the market's job is to price in future earnings. And if earnings continue to rise, then that multiple ends up getting back in line without the market selling off.
Exactly. I think that's the hope, obviously, that the earnings portion of the price to earnings, that the E starts to move up and gets us sort of, rounds us, smooths us back out. I was going to say, I think it's interesting as we get into earnings, in your experience, what stocks tend to move the most? Obviously we're going to start with banks, but with some of these high valuation names, just making the earnings number, just hitting expectations isn't really enough. So along with that comes a lot of trading opportunities. I'd like to sort of talk about the opportunities that you see over the next few weeks.
Yeah, it really does, especially with some of these, just the really popular stocks that are trading at much higher valuations, the FANG stocks and all that. Yeah, I mean, they have to outperform. But here's the thing, if they just hit their number, I mean, who knows? It's almost like a miss. And if they really beat it, these stocks can really perform really, really well on earnings day. And I guess in a roundabout sort of way, what I'm getting at is we see a lot of volatility. And in my opinion, predicting price on earnings day is really, really tricky.
I agree with that 100%. I say it all the time on the show, that if you had told me the day before, if you told me the earnings, what was going to come out, the commentary around it, and asked me to trade it, I mean, I'd say half the time I would have done it exactly the wrong way. So sometimes a little knowledge is a dangerous thing. And there's no real rhyme or reason. I've been doing this a long time, and I've yet to figure out why stocks react in a certain way vis-a-vis earnings or vis-a-vis commentary post earnings. Doesn't make a lot of sense. Sometimes it makes sense, though, in the context of the moves we've seen in stocks. And, we've seen, although over the last couple of weeks, it's moderated a bit, but we've seen huge runs in some of these bank names. JP Morgan, as we talk about all the time, Citibank got off the mat. Citibank went from trading in the low 40s to this in the 70s now. Do you look at the moves, the moves we've seen prior to sort of gauge your trading strategy and what you're going to implement as we head into the next few weeks?
Yeah, that is a really big part of my strategy. Now, me being an options guy, right? What I like to look at in particular is the volatility. But I think I look at it a little bit differently than a lot of option traders. I actually don't use implied volatility to forecast the move. I use past moves to forecast the moves. And then I let implied volatility kind of guide me as, hey, did the market price in too big of a move? And if that's the case, I can use some option strategies to kind of take advantage of that volatility crush going into earnings.
Can you speak to some of those strategies? I know you're setting up, you obviously, listen, you're well-schooled in this, you're well-versed. I'm sure the audience would really enjoy hearing some of the strategies you implement.
Yeah, I mean, I like to break everything down into as simple as I can make it, right? So there's two things you can do with options. You can buy them or sell them. And because I'm the first person to say, I don't know what direction a stock's going to go on earnings, what I'm going to do is I'm either going to buy some delta neutral option straddles, or I'm going to be selling some delta neutral option strategies. But you can't really sell straddles. I mean, you can, but there's a lot of risk there. So in those cases, I like to use time spreads, and time spreads probably make up a good 20%, probably 90% of my earnings trades, and straddles and some other things make up the rest of the 10%, if that.
Are there strategies to avoid in general, but more specifically around earnings?
Yeah, I mean, like the amateur trade is, hey, I think the stock's going to go up. I'm going to buy some calls. Like that ends up being the double whammy. Mm-hmm. Just like you and I have been talking here, you said half the time, you might be on the other side of it. And me too, So like if you're buying calls, I think anybody's going to be wrong 50% of the time, in my opinion, in my experience. And then you're buying these way expensive options and putting yourself at this tremendous disadvantage. So I avoid just simply buying calls or buying puts. Those are these simple strategies, but they don't work.
No, it's interesting you say that, because the statistics better than I do, but I've read, anywhere from 80 to 85% of all options bought expire worthless. And I think you're speaking to that right there. So you sort of got to know what you're getting yourself into. I would say ahead of time. I think it's also interesting, implied volatility is one thing, but also volatility for certain names is important as well. Historical volatility for names as well. Each sector carries with it different vols, and each individual name within those sectors does as well. As a layperson or somebody watching this, how do they get up to speed on some of those metrics?
Yeah, Guy, I think you hit it right on the head. Volatility, historical volatility and implied volatility, such important things. And a lot of times people don't look at it in advance of getting into an option trade. They tell you, implied volatility tells you basically, are these options cheap or expensive? Historical volatility tells you, hey, how much has the stock been moving around lately, which kind of guides me at, are these options cheap or expensive? So yeah, those two metrics, so important to be able to have in front of you, and then have a little proficiency with analyzing.
So you sit down and you see, volatility at its peak a year ago, a little more than a year ago. The VIX hit north of 80. As we sit here today, it's probably either side of 18, although I haven't looked, but that's probably a pretty decent guess. So obviously vol's gotten crushed in that year. A couple times we've seen some spikes. The most noteworthy one, I think we had a 40 print or so in the VIX, and it's sort of tapered since then. Do you get to the point where volatility is too cheap to put on some of the strategies that you've implemented over the last year or so, if that question makes sense?
Yeah, it makes a ton of sense. And it's a real important question too. I am a fan of trying to automate my trading as much as possible, but I'm not a fan of just blanket saying, hey, selling options always works, or buying options always works. I'm a big fan of kind of getting under the hood a little bit and looking, like, in this particular case, with this particular stock and these particular options, are they cheap or are they expensive? Should I be buying them or should I be selling them? So, like, I think it's really important to look at these on a case-by-case basis. And with the VIX here, and I'm just looking at it right here on my screen, it looks like it closed 1717. Definitely cheaper than it's been for the past year. It's continued to drift down, and I think there's some reasons for that. It's probably going to stay somewhat low, but we can find plenty of cases where, even though options are at lower levels, implied volatility is lower, there are some levels where it's still overpriced, relative to where arguably it should be trading.
I think it's interesting, and I don't want your thoughts necessarily, because it's not fair to you, on the stock itself, GameStop. But I think so much of what took place specifically around that security had a lot to do with volatility and people understanding negative gamma, understanding convexity better than the people that probably had the trades on in the first place. Can you sort of speak to that? The fact that there seems to be a faction in the marketplace that's preying upon over-levered position, and to a certain extent vis-a-vis options. We saw it with Archegos, I think, and it manifests itself over the last week or so as well.
Yeah, I never heard the word gamma squeeze so much in my life until about 6 weeks ago. And I love that regular retail traders are learning about these things. And whether intentionally or unintentionally being a benefactor of them. I think it's great. I'm a champion of the retail trader for sure. And I like to say, the more you learn, the more you earn. And when stocks make these big, gigantic moves, especially when implied volatility is really super high because retail's buying all these options and thus liquidity providers are short all these options, you can generate these much more profound moves because of the negative gamma hedging that the liquidity providers have to do. And yeah, it makes for some exciting trading. Good stuff to talk about too.
Oh yeah, listen, it's provided us with a lot of content over the last couple of months for sure. And I think you make a good point. People are learning about it, which I think is really encouraging. And maybe they're taking advantage of what got to be a pretty lazy, listen, I don't want to say it broad brush, but I think some of these market participants got lazy, never thinking that somebody would take advantage of the strategies that they implemented. And I think that's why you see a GameStop and an AMC and things like that. My next question is, because I get this all the time, I'm curious as to your thoughts. So many people come to me and tell me how successful they have been with selling naked puts. And that's the same that's the same type of thing in terms of options expiring worthless. What they'll tell me is statistically, it works 75% or so of the time. And they're correct. It does work 3/4 of the time. But what they don't take into account, in my opinion, is the 25% of the time that it doesn't work. You could give up the gains and more so that you just made over the last 6 months when it did work 75% of the time. Is that something that, cautionary tale, or, is that something you sort of ascribe to?
Yeah, man, Guy, I'm sure you've had the same conversations as me at parties where you run into some guy who says, "Oh yeah, hey, I sell puts all the time. I've never had a losing month. I've been doing this for 4 years. I know everything." And then, you get one of these market routes or flash crash or global pandemic, and they just give everything back. Like, it's so leveraged, especially if they're not cash secured. I've seen people lose more than is in their account, like 4 years of profits. And you can't tell people this until they see it themselves. I guess the good news, I think it was bad news for a lot of people, but in the long run, it's good news for them too, is that people did witness this time around, last year, and a lot of people really got it handed to them. And, what doesn't kill me makes me stronger,
No question. But, what's also interesting is I guess there's a point on the curve, if you were to sort of look at these things, where you're getting paid the requisite amount to take the risk that you're taking. In other words, vis-a-vis wherever vol is, you're getting paid the right amount to take that kind of risk. At an 18 vol or 17.25, as you just pointed out, the risk you're taking gets you further and further out the curve, and you're just not getting paid enough, in my opinion, to do that. And I think people have a hard time understanding that. And again, that works till it doesn't. The rationalization is, I'm going to create this synthetic dividend for myself, and if I get put Apple at 115, I'm just making up numbers here, but you follow me, I'm more than happy to be long Apple there. And that's the mental calculus that they're doing. But when it happens in real life, it's a completely different picture. So, how do you personally guard against not just that, but those types of, looks great on paper, but it doesn't work in real life?
Yeah, I mean, it's tricky. I mean, let me answer that question in two different ways. One, as an investor, if I'm an investor and I'm selling cash secured puts, first of all, I only do a cash secured. And second of all, I only do it if I actually literally want to get assigned. You hear people all the time who sell cash secured puts and they say, "Oh yeah, I don't care if I get assigned." And then they get assigned. And they're like, "This is terrible. When I get assigned, I'm really happy about it." The other thing is, when I do it as a trader or as an investor, the one thing that I look at is first of all, if I'm doing it as a trader, I'm doing it as a put spread. But either way, I'm always looking for, like, am I doing this at a good valuation for the options, which is what implied volatility tells me. Like I'm looking on my other screen here, just looking over our heads a little bit here. The implied volatility for spiders, we just talked broad market, definitely at a low for the last year, but it's been trading above historical volatility. I'm looking at a 6-month chart. It hasn't been below historical volatility for 6 months. And so, yeah, when we get some of these dips, we could run into, you can run into some temporary trouble, or you can take possession of the stock and sell calls against it. But I mean, I would say that even though we're selling a lot cheaper options than we've been selling, statistically, you ought to win on it in the long run still, because it's still arguably overpriced, even though it's low price, but it's overpriced.
It's fascinating. It's such an interesting conversation, and you wind up having it a lot more so when people were congregating and you talk to people in groups. But even so now, you get a lot of emails on the back of that. So just maybe you can speak to, here we are a week from earnings, 17.25 VIX, big run in the stock. I mean, the S&P is effectively all-time high, NASDAQ within whisper. Russell pulled back today, but you get what I'm coming at. Yields now seemingly have leveled off here in the 10-year around 165. What strategies are you looking at, and sort of, it's interesting, I look at option strategies the same way I look at a tackle box to the extent that you fish, right? Different lures work different times a year, different whatever body of water, whatever fish you're looking for. I think it's the same thing with option strategy. So what lure are you pulling out of the tackle box over the next couple of weeks?
Yeah, I am. I mean, in my investment side, I am selling calls still. I have to do an adjustment every now and then, like I had to do yesterday. But I'm also slowly kind of working into some hedges. Now, I'm not calling the market top. I think the last person who did that was like 1987, Elaine Garzarelli or something. But I'm not calling the market top. I don't know if and when that's going to happen. And I'm not bearish. But from my experience, like nobody calls the market top. Like it takes us by surprise. And so with these really cheap options, with the VIX down at 17 and change, I like having, being partially hedged on some of my long-term investments. It protects me. It's that insurance, and I hope I lose on that insurance, but I want it there, and I can get a really great deal on it now.
It's interesting you mentioned insurance, and I think one of the, and maybe you can speak to this if you have some opinions. I'm just curious. Volatility used to be, options used to be something that people bought for exactly what you just said, insurance. You have life insurance, you have auto insurance, house insurance, flood insurance, fire insurance, and it stands to reason you have insurance on your portfolio. And then I think, central banks, Fed came around and they basically have told us, few instances notwithstanding, that the market really doesn't go down anymore. And I think people came to that realization that, why am I wasting my money on these instruments when, the market really doesn't go down in a meaningful way. So I think by stopping buying those insurance policies, that was the first leg lower in historical volatility. The next leg lower, I think, was people said, wait a second, not only don't I have to buy these anymore, I can actually sort of sell some of these instruments and create a synthetic dividend for myself. And I think that's sort of where we are now. That compresses vol. So, I think, in my opinion, and I think you alluded to this a little bit, in certain ways, volatility becomes spring-loaded in that environment, and the least bit of negative news, and you see a VIX go from 20 to 30 like we did on a number of occasions over the last 6 months, literally in hours. I mean, is that the environment that you think we're setting up for now?
Yeah, and I kind of want to talk to that point that you just made. I am really picking my spots here. I mean, I would still say that overall, I am short premium overall, and along the market for sure overall. But just looking for those opportunities where if the opportunity presents itself to be able to get a reasonably good deal, to get some cheap protection, then I'll nibble on it, and then sell whatever it is I have to sell against it later.
Are there any vol skews that you look at, put to call ratios, or any things that, metrics that you look at, or indicators that you look at day to day that sort of give you a hint as to what's going on?
Yeah, jumping back into our earnings discussion, during earnings season, I'm constantly looking at the term structure volatility, constantly looking at that time spread volatility skew, because you can get some, there are some intermittent opportunities, and you really have to screen from them. It's not like every time spread's great during earnings season, but when you find some, they can be really, really fantastic.
And can you speak to some of the, I know we talked about strategies and stuff that you're implementing, but anything that you're looking at right now that's really struck you, it's got you sort of jazzed up over the next couple of weeks? You sit down and look at, for me, it used to be my trading pad. The world's changed, obviously, everything's digitized and computerized, but you look down and see something that really has got you excited in terms of a trading opportunity.
Yeah, a couple things. One is, I'm giddy as a kid in a candy store waiting for earnings season to hit, because that's really, that's my sweet spot. That's kind of my trade. But I've been experimenting with a number of things lately, and one is stocks that rise leading up to earnings. And this is again, it's not, hey, every time a stock has earnings coming out, go and buy it. That's definitely not the case. That won't work. But there are some established patterns with certain stocks where it ends up being a pretty good trade. So that's kind of one of the new things I'm working on. Kind of a secret that I just told.
Yeah. Well, look, I don't think I'm splitting the atom here when I say, we've seen it over the last couple of weeks. Facebook, I think, reports, if memory serves, on April 28th, along with Apple and Google, and Amazon might be that day as well. But you've seen some pretty significant runs in those names. And my sense is, that will continue in earnings. The real question is, as an options trader, or as just a trader in general, is it prudent to pull the ripcord ahead of earnings? Do you wait and you play the $100 table? I know it's different for each case. I totally get it. But, if you were to pick one side of that equation, does the run up force you to sort of, pull the ripcord right prior to that release? Or do you sort of let it run post earnings?
Well, on the ones that I've been experimenting with, the ones that run up going into earnings, I'm out before earnings happens.
Mm-hmm.
But my real trade, like the biggest opportunity, in my opinion, in the market that begins in 1 week, is that overnight earnings trade, where we're basically putting on a time spread or maybe a straddle, or there's a couple other strategies that work in there depending on how the numbers line up, where you're putting that trade on immediate, like the session before earnings, and then taking it off the very next day. And yeah, that's the biggest opportunity that I have. That's the biggest opportunity that I think anybody has. It's a great one.
So the next few weeks are going to obviously be busy for you. This happens 4 times a year. I got to leave in just like 2 or 3 minutes, just in terms of closing with my portion of this. What are you looking for? Are there any sort of indicators outside the things we just talked about that you're looking for sort of clues as to what the next trade is?
The typical stuff. I'm always looking at support and resistance. It's old fashioned. It's really, really simple, but it works. And that's why I rely most heavily on that. And then I just use the volatility analysis to decide, how I'm going to play some of these bounces off it or breaks through it.
Well, Dan, I appreciate your time. Unfortunately, I got to play myself on TV in a few minutes. I got to get on my call. So I want to thank you, but I know you're sticking around, and I know we have an offering that I think Natalie's going to tell the group about. I want to thank everybody for their time. I'm bowing out, but this is not over. So thanks, Dan, and thanks everybody at Options Hotline.
Thanks, Guy.
Thanks, Guy.
Thanks very much,
We
Guy.
do have a couple of questions actually coming in for you, Dan. One of them just piggybacks off of what you were just discussing with Guy. This question's coming in. I'm a new options trader, and I'm interested in trying to tackle, the earnings announcements. What's the best way for me to sort of dip my toes in the water without, taking on too much risk, in your opinion?
Yeah. Earnings, like Guy and I were talking about, earnings can be super tricky, and you really got to be prepared. So I actually have a webinar later tonight in 2.5 hours, 6 Central, 7 Eastern. And Natalie, is it all right if I invite everybody here to attend that? Okay.
Yeah, please do.
Yeah, absolutely.
Yeah.
And if you're going to pull that up, Dan, we'll actually chat out the link for people to go ahead and click the link and go directly to sign up. But if you want to tell everyone a little bit more about that webinar, what you're going to be teaching everyone and what they can benefit from, please do.
Yeah, great. So later tonight at marketticket.com/hotline, that's where you register. We're going to talk about our proprietary earnings trading system. And I've literally spent almost 30 years developing it just from the things that I learned down on the trading floor and my volatility analysis. And I've really perfected it over the last 3 years. Like I was telling Guy, this is my strongest trade. And I want to share it with you. I want to introduce the trade to you, kind of tell you a little bit how it works and how you can take the next steps and actually start using it yourself.
Awesome. Dan, can you talk a little bit more about your total earnings domination product? I know you're going to touch on that later in your webinar tonight. but maybe if you can give a little more information to those who are, intrigued, want to learn some more. And while you're doing that, I'm going to go ahead and share my screen and be able to show everyone where they can go on Option Hotline to sort of get some more information about it later if they're
Great.
interested in signing up.
Very excellent. So, so total earnings domination, that is my, that's my proprietary system. It's the one that I was talking with Guy about. It's the one that you can learn more about tonight. But I agreed with Natalie to have kind of a special deal on that for anyone who's attending this webinar. So while Natalie's pulling it up, let me kind of explain a little bit about how it all works. So what we do is we get a list of all of these stocks that have earnings coming out either tonight after the close or tomorrow before the open. And we just do this every day throughout earnings season. And what we do is we kind of go through this really, really simple checklist. And I actually created a spreadsheet to make it completely foolproof, where anybody can just enter the numbers in there, and it basically gives you a yes or a no. Do I make the trade or do I not make the trade? It's so simple. Literally anybody could do it. And it's really great. I mean, it works fantastic. I think I might have had one losing trade last quarter, and I did these trades live in front of our class last quarter throughout an entire week. I want to say I had one losing trade throughout all the trades we did in that class. So it's just a really, really great system. Works great. It's numbers based. It's data driven. It's road tested, and I personally trade it, and I've been doing it for years.
That's really interesting that you said you do live trading, in front of the people in the class so they can see in real time what you're doing and get that information. And it sounds like you're going to be kind of going into more detail with that on your webinar later this evening for those who are attending live today, which is pretty fantastic. And if everyone can see my screen, you can see on here, just a little snippet of what you'll get with the total earnings domination system that Dan has created. So there's a lot of information there. If you click through up here to buy now at Market Taker, it'll take you to the purchase page and give you even more info. And I know Dan is willing to, of course, talk with anyone and get some, give out more information and answer questions as they come up. So maybe Dan, you can tell everyone the best way to reach you and ask, questions about this. And I just also chatted out the direct link to this page. So feel free to go ahead and open your chat box and click that link and get some more information. And while Dan's talking about how you can contact him, I'll put up his screen about how to sign up for the free webinar tonight as well.
Yeah, you can contact me. First of all, if you are able to attend tonight, you can literally contact me during the webinar and sort of ask questions live, because I'm really going to go deep into the process and make sure that you really understand how it works and how you can move forward with it. If you want to ask me just a one-off question, like, Dan, I'm really excited about this. I want to join. When does it start? Whatever the question is, you can simply go to dan@markettaker.com. That's market, like stock market, taker, like take what is rightfully yours, dan@markettaker.com. And I'd be glad to answer any questions about total earnings domination. This is sort of the super sweet discount offering here that we have for Options Hotline folks. And if you know that this is for you and you really want to dominate during earnings season, then you can go ahead right now and go to that link that Natalie just posted, click on Buy Now at Market Taker, and you're all good to go.
Thanks, Dan. One other thing, can you touch on the $497 price? Can you touch on the time frame? How I believe people get this for at least 6 months, right?
Yeah, so you get this for an entire 6 months, and there's a whole bunch that comes with it. First of all, you get a boot camp video. You start with that literally just explains the whole system. And then there's a 4-part master class that comes with it also, which is 4 video classes that go even deeper. And you'll also be a member of our MTM community chat room, where people literally share trade ideas and are talking all day long about the earnings trades that they put on, helping each other get into them, helping each other get out of them at the right times and at the right prices. So important. And then what I would say is probably the most important part of it is that I literally traded live in front of you online, just like we're doing here, every single day for an hour a day during the last week of April, which happens to be the busiest week of earnings season this quarter. And so you're literally going to get hands-on training. You're literally going to see the system that you learn about in action. I know that when I take online classes, like I can watch the video, I can read the book, I can do the modules, but when somebody's literally hands-on saying, okay, Dan, right now, click this button here. This is how you do it. And then I say, wait, this button here? No, Dan, this button here. Like that hands-on, it's invaluable, and I know that I need that when I'm doing classes. And so that's why that's why I created it this way, just to make it so, I like to say, to make it so you can't screw it up.
Yeah, and it sounds like you're setting up actual, live earnings trades that everyone can follow along with. So we're getting a question from Raj asking, do you get any alerts to buy or sell, or is it solely a learning program? And correct me if I'm wrong, but it sounds like it's a little bit of both.
Yeah, it's a little bit of both. I found that the best classes kind of have to be a little bit of both. If it's just pure alerts and you don't really understand it, you're not going to make money. And if it's just pure education and not getting the alerts, well then, okay, great, you learned something, but you want to make money. And so yeah, I kind of bring you the Goldilocks. I bring you the best of both worlds, where I show you literally how to do it in really great detail, so you have it mastered. And then I bring you into the live trading, and I give you those alerts live, real time. You watch me set it up, and everybody gets the trade at the same time. Like, look, that's another problem with some alert services, is that by the time you get the trade, 500 people already traded it, and it's no good anymore because the price changed. You're literally getting that trade alert at the same time as everybody else, at the same time that I'm actually making the trade. And I make these trades with my own real money in my own personal trading account.
Oh, that's awesome. Thanks so much, Dan. That's a lot of great information, and it sounds like there's definitely some interest. So I would, encourage everyone, if you want to attend Dan's free webinar, just as he put on with us this afternoon, he's doing another one this evening that's going to go more in detail to his specific product, total earnings domination. And, feel free to do that and see if it's for you and ask him all the questions. And then you can see on my screen now, this is the link to go ahead and sign up if you're interested to subscribe to Total Earnings Domination. It's in the chat box as well. If you want to go ahead, Steve, I'm going to go ahead and put the webinar screen back up. If you want to kind of jump in and take over, we're going to start wrapping up here on the outro. But Dan, thank you so much for taking the time. It was a great conversation with Guy. You two seem to have a really good chemistry going back and forth. So we look forward to having you back on and having more webinars with you.
Yeah, that was super fun. Yeah, guy's great, super smart, super great guy. And yeah, thanks for having me. I really appreciate having the opportunity to just share some thoughts with your group.
That was
Thanks
great,
so
Dan.
much, Dan.
Yeah, thanks very much, Dan. And for those who are still with us, our participants, we are going to do just a bit of an outro, as Natalie mentioned, just to go back through our website once more, just to make sure that all of you know exactly what you can find and what you can get on our website. Currently, Natalie is sharing our webinars page, where we always have our current webinar featured, and then we usually have the upcoming webinar, which we will have on the next one, which will be on the 21st of April. And then further down that same page, we also have quite a few replays of all of our past webinars from all of our presenters. So you can see Keith Harwood, another one from Dan, Carrie, Dr. Duke Given. So we have quite a few of them going back quite a few weeks and months, and they're all worth hearing and seeing if you did not see them in the first place. So we strongly recommend that you check out the webinars page. Also, on our contact page on our website, we want to let you know that we have a number of different emails and phone numbers that you can call to get information from us, but most importantly, our general customer support. So if you email us at support@optionhotline.com, we will get you an immediate response Monday through Friday, 9 to 5 Eastern time. And in most cases, even outside of those hours, we'll get back to you quickly. Support@optionhotline.com. Secondly, for trade alert questions, please specifically email to Keith@optionhotline.com if you have any questions regarding our trade alert program. And all the way to the right, for any questions on our podcasts or our webinars, please email us webinars@optionhotline.com, webinars@optionhotline.com. And
one thing there, just to jump in, Steve, one thing as well, please check your email inboxes tomorrow from an email from the email address webinars@optionhotline.com that Steve just mentioned. That's how you're going to get the recording of this afternoon's webinar, as in addition to a free giveaway from Dan outside of the free webinar link that we sent out already for this evening. Thanks, Steve.
Sure. And if you scroll just a little bit further down that page, we're just going to get to, we want to make sure that if you have any trouble getting our emails on a regular basis, please take a look at the box on the left of your screen where it says whitelist Option Hotline emails. So if you ever have any trouble, if you think you're not getting our emails, please click on that box and it'll give you instructions on how to whitelist Option Hotline emails. And also to the right of that, you'll see a box showing download Option Hotline contact card. So all of our contact information to reach us is on that card. You can download it very easily. And then a little bit further below that, we invite you to reach out to any of our commentators, our authors directly, Dr. Given, Dan Passarelli, who you heard today, Don Fishbeck, Steve Kalasian. So feel free to contact any of our authors directly. And then just last but not least, if you'd like to see our About tab on our website, we always would like to tell you a little bit more about our Option Hotline website that we can help you develop your skills as a trader. Here is our mission statement and our values. We'll just let you look at that very briefly. And then below that, once again, we have a bio on all of our authors, commentators, Keith Harwood, Carrie, Dr. Duke Given, Chuck Hughes, Dan Passarelli, who you heard today, Don Fishbeck, Steve Kalasian. So feel free to read their bios, reach out to them, read their blogs, and all the contact information is there. And that basically wraps it up for our website tour. We do still have a few participants with us. Natalie, anything else we need to pass along?
No, we're all set, Steve. Just want to thank everyone for taking time out of their afternoon to join us, and we hope to see you at the next webinar. Visit that webinar page on our website. Check your inboxes for invitations from webinars@optionhotline.com.
And as Natalie mentioned, you will all be getting an email tomorrow with a free gift and more information and a link to the recording of today's program. So thank you very much, everyone. Thank you, Natalie, and we will see you on the 21st.